Alright, so now that we fully explained what the framework indicator does, and just as a reminder, it will help you identifying the context, identifying which maturity of those contexts are you currently into, and it will also help you price filtering actual price that matters to trade and price areas in which speculative trading can be done. But still, you never, and professionals knows about that. Every professional applies that in its own strategy. You never ever trade just out of a price. It isn't because you've been highlighting a price that you need to trade this blindly. There is an additional layer of risk management that is absolutely necessary for every aggressive professional trading. You're going to have to I mean, this is definitely good risk limitation to use framework, but I would say it's not enough if you really want to be aggressively trading, because what we're doing in here is speculating on the future, but God knows what's going to happen. So you really need to risk limit, because you're probably generally going to be trading against the consensus. Everyone's going to be bullish and you're going to be selling. So you're going to be trying to sell a market top, which is obviously coming with higher level of danger compared to trend traders, who are just going to trade the trend when it's here, when it's visible, and they're going to buy because there's no sellers. So this is how those guys, the trend traders, will risk limits. But as we don't trade this, as we trade more aggressively, and most of the time we're going to trade against the consensus, which means you're going to sell a rising market and you're going to try buying a falling market. So it is high level of risk. Therefore, it brings obviously higher level of reward, and aggressive strategies will have definitely much better rewards than any other trend trading strategy, sorry. But still, this is how it goes. If you want to be more profitable in trading, you definitely want to go into more riskier approach regarding trading strategies instead of using leverage, because leverage definitely has no answer in the future. It always going to bring you down, as taking more risk just depends on how great you handle that risk. If you can't handle this, it definitely going to bring losses. If you can handle that risk with a decent risk management, it's just going to bring up more gains. So that's the only way to be more profitable in trading, being more aggressive. But let's be honest, like I said earlier in this video, risk managing is definitely what trading is about. And obviously in here, the guy who just starts trading is not going to have real perception of what this thing is actually. Risk management, the thing that you probably heard a lot here and there from every professional trader, or every trading coaching stuff or anything like that. They will all talk about this, because that's definitely what trading is about. How do you risk manage instead of gambling or gut trading? So risk management, people will call that simple, as it absolutely isn't. It is the most complicated stuff in trading, because that's the thing that takes years to get through. So obviously when you're beginning, you're definitely much worse than I will be at risk managing. So my goal in here was to find some in-between thing between both professionals going to need a very tight risk management, and noobs and beginners in trading who will just need to have the first glimpse of what actual risk management is and looks like in a professional perspective. That doesn't mean you're going to do it well, because at the beginning you're going to have psychological issues that will alter your judgment and will cause problems, and that's the reason why first of all you need to work on your psychological biases that every beginner has. For specific reasons, no one is meant to be trading. No human being is meant to be trading, because we're emotional human beings. We're emotional animals, all right? And emotions must be put aside in trading. I'm not saying you must feel nothing. All I'm saying is that you're human. You're feeling things because that's what you're meant to do, and hopefully you do, because otherwise life will be pointless if we weren't feeling anything. But the thing is that when it comes to trading and money management, some emotions will be absolutely destroying your money management, because they will alter your judgments and just put you into very dangerous biases in which informations will be straightforwardly displayed in front of you, but you'll avoid reading them. You'll just act like they weren't here, because you will have a strong bias. You will want something to happen, or you will just hide something, and these are very dangerous biases. Obviously every beginner has this, and everyone went through this. Every professional has been through this. So if you have to get through this, obviously I'm providing a lot of psychological support to help you getting through those dangerous steps which everyone has to get through. But still, I'm going to help you, pushing you into the right direction anyway. So for professional traders, you're going to have very tight risk limitation out of the signal indicator that is pro-momentum. But for beginners, it's also going to put you directly into the highest level of risk management, like a professional would use. I'm not making things simple. Okay, it is complicated because risk management is complicated any fucking way. So I'm not going to put it simple, telling you, now it is not that complicated, here is how you can start risk managing if you're a beginner. No, I'm going to put you into professional condition, and you will have to work hard to get it. Obviously, it will take time, but this is absolutely necessary. This is what the trading job is about. And it is not simple. Whoever is stupid enough to make you think this is simple, they're probably just trying to sell you some shit. All right, so I'd rather like to be straightforward with you guys. It takes years to really process the shaded areas, the shaded grays, because buying and selling and trading is nothing but that. It is nothing like black and white. You don't just buy and sell. You will buy with some amounts and some tight stop losses, or buy with lower amounts and larger stop losses. You will risk manage and partial profit taking here for some reasons. You will put the stop at break even in here for some other reasons. It is complex, and you'll have to learn this the hard way by making mistakes in the first place, but still you'll learn through this. And I stand to believe that the easiest way to get through this is not to make it easy for you, it's just to be as normally complex as this thing really is. So now let's dig a little deeper, because obviously I didn't want something fully and freaking dangerously complex. I wanted something that was readable by an unexperienced person. All right, so what we've done in here and how it's ended, and once again, this is the result of 4 years of development. The first momentum indicator I had 4 years ago was definitely way different than what it is right now, because I've been adding many informations in here for different reasons, and I've been applying new things to help beginners understanding this very complex stuff. So let's dig a little deeper into this momentum. So first of all, we're just going to talk about the four assets, the four major informations displayed in here. The first one in here is called the trade lines. These are one of the latest additions I've made into this indicator. And what they represent is pretty easy. Basically, you know what the momentum is. Momentum, we're going to go straight in here. I hope you know what momentum is. Otherwise, momentum is just simply the slope of the global market movements, of the price movement. The faster the pace, the higher the slope, the sharper the slope, obviously the higher the value the momentum will be. All right? So obviously that's what momentum is. What the trade lines are studying is how those momentum, so those forces are playing through time. So it's like trailing the momentum itself. So we study how those movements behaved in time. And it gives you just a thing. Consider this as being like a thermometer. All right? Let's just zoom it in. It's going to be, maybe it's going to be a little bit too much. Yeah, I know, it is definitely too much. All right? But let's just assess this as being a thermometer. You take this, which is the resistance strength, and this is the support strength. So the bullish strength, the bearish strength. So at every instant in time, I just choose my cursor. In here, we see there is no bearish resilience. So the bulls are absolutely in control. There's not even a bearish sentiment in here, and bulls have a strong sentiment. All right? The higher the support trade line is, the stronger the bulls are in terms of force within the market. All right? And as you can see, those forces can be reversed pretty radically. In here, just a little drop in prices has been rising all the bullish sentiment. So consider this as sentiment lines. The bearish sentiment is rising, but still the bulls are fighting back. Range, all right? Then the bulls take it over, the bears try to fight. They tried one more time in here, failed, no bears, trend. Simple as that, all right? Overbought, and definitely no bears anymore. The bulls are rising context, got rising confidence, the trend, the divergence, and everything like that. So all of this may help you understanding what's going on at every candle. Bullish, bearish pressures are going to be answered by the trailing line. So if that's the information you're searching for, how much pressure puts the bulls against the bears, then this is what you're going to want to have a look at. The trail lines. Simple as that. All right? Then what you're going to have on top of this, as we said, is the momentum line, obviously, so it's the price strength analysis and the price slope analysis. There's an additional sine wave indicator that can be done in here because, as we said, we're going to use sine wave as an input, and you can put sine wave on the local time frame. All right, let's just see what it does. Just wait for a bit. It's going to plot. All right, as you can see, a tiny shaded line has been happening in between. This is the sine wave local time frame line. So when you get on the bottom part, mean it's bulls time to show up. Bulls are supposed to take over sooner or later. That doesn't mean it's going to happen right here, right now, but it is a timing that normally bulls should profit from. All right, so it helps you about timing, which is great, but once again, this is predictive analysis, so generally, and please don't make that mistake of thinking that when you're here you need to sell. Look at that. You were selling in here? Absolutely not. Not a single bearish pressure, the bulls pressuring in, the trend setting itself. You definitely don't want to sell in here. In here, for example, look at that. I don't even see the prices. Do you want to sell in here? Probably yes. It must be short term, but it is definitely a selling opportunity here, and you've got that signal that we're going to describe right after. You also have this, which is important, is this trend sine wave. Make sure that those things are, to understand that those things are disabled by default for a simple reason, because when you're learning my strategy, I want you to stick to the essential, to the simple things. I don't want you to add those stuff which are just there for additional risk taking, because the more risk you want to take, the more aggressive you will be, the better you will need to manage this risk. So it will help, and obviously I'm not going to get into much details about those stuff today because these are things meant to be for people using my strategy for longer than a year. If you've been using this for a year, you can start using those additional informations to be more precise in trading and more aggressive. This will help you reducing the stop loss sizing, increasing the position sizing, and therefore rising even further the gain by being more aggressive. But still, this is not meant to be used by you if you're just learning my strategy right now. All right? But obviously, these are the sine waves, and you're always going to try trading in areas where the context sine wave is going to be reaching out the short-term sine wave. So, for example, in here, you knew there was a really interesting timing for bears to try taking over. All right? So that's like it here. Really interesting timing for bears to try something. And as you can see, that doesn't mean it's been working fine, but still, prices have been falling first. This is risk management. When you're going to sell in here, you're going to profit take in here to just pay for your stop loss and everything like that. I'm going to teach you all of this throughout more complex video because the rules are really, like I said, it's shaded gray areas. It's hard to put rules in this. But I tried to make it as simple as possible, and this is what the trading signal is about. And that's the final thing we're going to answer in here. Those trading signals, you can see, these are multiple things. You've got gray dots, you've got red dots, you've got blue dots, you've got profit take, TP, which means taking profit. All right, you've got exits, you've got divergence structure, you've got bull, you've got bear, you've got bearish divergence, you've got gray divergence. That starts to be a shit tons of things, don't you think? It is way too complex, don't you think? No, it's just because risk managing is complex, so I want you to understand the risk management. So yes, there are many possible signals. Each of them will have a defined psychology, a defined level of risk. And I've been trying to do this as simple as possible, even though this is complex. And I understand this will take weeks for you to process and to really get it straightforward. This is where you have a PDF manual to read when you're learning those indicators. And it's absolutely necessary, and I stand on this. Before you even go lower in this website to just start your week trial, I suggest you start reading the PDF manual first. So there's a lot to process in this manual, and you might need to read it at least 2 or 3 times to really get through this. Once you think you absolutely understand what this is about, how it works, then I suggest only at that stage you launch the 7 days free trial and you actually get your hands on the dirt and figure out how to use those indicators on your own, trying this on real-time market, making your goddamn own analysis, trading independently. I'll obviously be there to assist you, and the Discord will be there to assist you as well, but first, mastering this PDF is absolutely necessary. That doesn't mean you need to know everything about it, but you need to understand most of it before triggering the PDF, the week trial. just because a week is fast, but it's fast enough for you to see if this fits you or not. But first of all, you need to understand what this is about. Those videos are here to help you, giving the first glimpse of what this is about. If you don't like that, if you don't like the way those things looks, about my strategy working together, if you don't like that, then just don't go any further than that. It's like a first filter. If you don't like it, go away. So many options out there to learn trading. Right? If you like that, then you get to download the PDF. It's for free. I give you this thing. I don't need you to subscribe to any goddamn shit to get that. I'm not even taking your email for this. I don't really want that. So you take the PDF. It's the next step for you. You read it. Once you think you understood enough and you want to get your hands on the dirt, then you do it. And at that moment, you can start seeing for a week absolutely for free. This thing is simple. When you sign up, you're going to be asked to log into your PayPal account to set up a subscription plan, but the subscription plan won't bill you until the 7th day. So you're absolutely free to leave for 7 days. You get in, you're not going to be billed, not a single dollar, not a single euro, unless the 7 days showed up. All right? So you've got 7 days to try. You like, you don't like. If you like, you stay in. If you don't like, you just cancel the subscription and no one will ask you for anything else than that. You just get in, get out for free. Don't like, you move on. I'm not here to pick your money. I don't give a damn about that. So the thing is that this is no trap. I'm doing everything for you to be fully aware of what you might be paying for. And you're only paying for job. And you're paying for the time I'm spending for you. I really stand on this. It's absolutely important that you get that. I don't need your money. I don't really give a shit about that. I make my own money. And the only thing you pay for is all the free time, the time I spend for free for you aside from this. All the educational content to put you into the right direction to eventually someday become a trader. An independent, fully independent trader, because I'm not here to put you into lifetime subscription plans and everything like that. I just want you to get the job, and once you get it, you move on to something else. Otherwise, you're paying for my algos who are here to assist and bring you a way more comfortable way of trading. Using tools, semi-automated tools that helps you getting the hell out of trading with waiting for candles to do what they want to do. You just put the goddamn alert, move the hell out of your charts and wait for the alert to trigger. And yes, you'll see this is way more comfortable than sitting in front of a chart waiting endlessly for something to happen. This is how trading is right now. If you're waiting in front of a chart, then you know that that someone else is having an edge on you, because someone else is probably using algorithms to filter out prices and be there only when it matters. All right? So those trading signals, I'm just going to give you a quick glimpse of what this is. Even though I can't go any complex in here, I'm going to leave it to the PDF manual. These are different levels of risk. So obviously they are color-coded. All the gray signals means very low risk limitation. So facing those signals, when you have the red triangle, for example, in here, as you can see, there is a trade to take in here, right? There is all the sine waves in there, suggesting we're a range. You can see bulls and bears balancing the strength. We're into resistance context. You've got the price signal. You got everything in here for a trade. The thing is that this trade is different from this trade, it's different from this trade, it's different from this trade. What gives you the actual strength you're going to put in these trades, how far you're going to put the stop loss, is defined by this. And this is a taking profit pattern, a gray signal, which means not so good in terms of risk management. So in here, you're not going to put 10% risk of your trade. It will be stupid. You're not even going to put 5%. In here, you're just going to risk 1.5% of capital, and you're going to put a stop loss further away. So it is just a tiny trade, just here to pick up a little bit of money because it's low risk, but still there is risk on this trade. So you don't want to risk it all in here, definitely not. This is the lowest type of trade. The taking profit structure means, yes, you can go ahead, you can trade, it's safe to trade, but still, don't be too aggressive regarding this trade. It's very less likely going to reverse the trend. It can happen, but very less likely going to be. Right? Then you've got a higher level, in the gray signals you also got those dots. What they mean is basically we're overloading, which means we've been looking on too much of momentum. The price is a little bit over-tensed. It might cause some pullbacks. Generally, that means the momentum line will push back to zero, but that doesn't even nearly mean we're obviously going to have a reversal. All right, so you can trade those signals once again. If all these signals suggest you might take the trade, this is a trading signal, so you can get in. But still, what it means is that you will rapidly profit take, because anytime the momentum is going to be unstretched, it can just restore the previous trend or the previous movement. So if you're selling out of an upward move, you know that there's going to be a limit. It means the limit is not that far, because in here the risk management is not so great. Then, obviously, you've got another set of signals, of gray signals, which is divergence. They're just a different type of signal. Instead of taking profit structure, you've got divergence in the prices, but the signal is gray as well, which means it's a little bit better than the taking profits. You can see the shaded gray is a little bit darker, all right? So it means higher probability of reversal, but still it's a gray signal, which means you don't go aggressive on them if you want to reverse a trend. That's definitely not going to happen. It means we're going to dampen their expectations. You're probably going to push back the support first, and eventually you'll be able to buy and manage the risk. That's all it means. It means you can target the previous resistance. So buying in here, you knew the target will have been there, so you would just have bought and profit took. Getting the hell out, not even trying to see any further than that. You knew the risk limitation for a reversal was pretty narrow. All right? As simple as that. It's shaded gray areas, and you see what I say, I try to represent that through actual, reliable, and indisputable trading action throughout signals. Those signals have been color-coded for you to really understand those shaded gray areas. All right, obviously, you got the exit signal. This one is way darker, so way better risk management. On this one, you can be a little bit more aggressive. In here, as you can see, range targets, exit signal. Nah, that's great. You could have traded in here, but still, you had no triangle. So, as you can see, you're going to have multiple information showing you the risk limitation. The higher the precision it is, the more aggressive you can be. The lower it is, the less aggressive you must be. It's simple as that. Right? You could have traded in here without the trading signal because you had this thing. So this thing cannot necessarily replace this. It's complementary. But you could have traded in this area. But like I said, no triangles, so very tight risk limitation. And you remember what we said earlier. The context boxes were unfolding. So in here you knew it was irrational trading. So trying getting against that trend in here was possible, but very, very, very risky. Very, very, very risky. All right? Obviously, all of this, you'll get better at this with time. It really requires a lot of time to process all of this. But still, even being a beginner, normally you should be able to way better trade than if you were doing without those stuffs. All right? So, and obviously by finishing, I'm going to talk about the red signals. Those were overbought signals. You've got the opposite one, oversold. All right? That doesn't nearly mean you're going to need to trade this. This can be used to confirm trends and things like that. All right? But the red and blue signals are signals you'll see among trending contexts. When you have this, when you're in a range and you start to see red signals, you see, oh, if you're at the trend channel, then maybe there could be an emerging trend. All right? But like that, when you have red signals in here, in a bullish trend, what does that mean? Do you even sell this to be a bearish trend? Trends never reverse from bullish to bearish. Trends always comes out of ranges to reverse them. So the thing is that in here, those signals, they're just showing that the trend is fully loading in. At best, this is a profit-taking structure. No more than that, that doesn't even mean you're going to sell in here. So it is how this strategy works. Many information, and that may sound absolutely surrounding at the beginning, but as you'll get to learn this strategy, you'll see that most of the signals doesn't mean any fucking thing depending on which context you currently are into. So if you cannot answer the simple question, what context currently are you into, then all those signals will be worthless because you first need to filter prices. You need to make sure that you know what context you're trading and to know what signals you want in this context. Being overbought in a bullish trend, how normal. It's simple as that. Overloading the momentum in a bullish trend, goddamn normal as well. All right? Exiting in here, not normal. Exiting out of a target, not normal. All right? So you could definitely have done something in here. That didn't mean it was absolutely going to work because once again, We're just risk limiting. We're not here to predict the future. Absolutely not. At some point, some signal will just absolutely don't work. And I'm going to go straight forward with you guys. If you follow me, you may know I've been taking some losses recently on the SPX because all those signals in here were tradable. But still, they didn't work. In here, the market, instead of reversing, has been pushing higher and higher and higher. The thing is that some point strategies never going to be perfect. They may work a shit ton of time and have pretty crazy high level of precision, but still nothing works 100% times. All right, those signals in here, they were meant to be traded. This one had to be taken. It was a divergent structure with lower lows. Could have been a trend emerging. Definitely I've been selling in here. Didn't work out. Absolutely didn't work out. I've been selling in here as well. Didn't work out neither. So it doesn't work 100% time. But still, I've been selling in here. Worked pretty fine. Buying in here. Worked damn fine. Selling in here. Perfectly traded this market top. This one as well. All of these, if you really learn how to do this, definitely you'll get more profitable trades than the losing ones. But still, you need to understand that if it doesn't work the first time you trade, that doesn't necessarily mean you got it wrong. At some point, the indicator may be just misleading because they cannot be perfect. Even though how hard I've been working on this for these 4 to 5 years, making them better, more precise, even with this, nothing is perfect. And there are many trades that won't just work. But normally, if you respect the strategy and if you repeat that through time, consistently following the rules without ever breaking those rules, then normally you should have probably one of the most profitable aggressive strategy available out there. But the thing is that this is an aggressive strategy. So you'll have an alternate with this, different layers. The PDF manual would explain that very simply. The thing is that the strategy will be applied differently by every trader who tries to use it. This is not a hand-in-key strategy. You learn it and you're going to be a winner. That's definitely not how it works. First of all, you're going to start trading this with less aggressive approach. And eventually, through time, you'll get as aggressive as I am. And you'll try catching the market top, catching the market bottoms and everything like that. But you don't going to go straight in here. All right? You don't go all in when you're beginning. First, you're going to try low leverage to understand the processes, figuring out the shaded gray areas of risk management, and then only through time. And it's taking a long time in here. You need to be rational. You're not going to be a trader in 1 year. It takes at least 2 to 3 years to get there. It's a graduation. I mean, just imagine that you might be learning one of the most complex jobs on earth. Do you really think you could have been taking this in a year? Do you really think it's rational? This job is one of the most rewarding jobs the nowadays world can offer. People can be billionaires out of this, starting with 10,000. So do you really think there is a lot of workplaces in the world that can afford and bring such rewards? No, there isn't. So obviously trading is hard and not everyone will make it. You need to be rational. You need to be making sure that you have the mindset to push through this. It's a long process. It requires a shit ton of smartness, intelligence, patience, and a lot of qualities that most people don't have. So you will have to work hard to this. It takes time, but still, everyone can make it. Those who tell some people are not meant to be traders, I absolutely disagree. Everyone can be a trader. The problem is we all start not being able to, and we just have to process ourselves to become sustainably compatible with trading and low-risk income through times. Because making short-term gains is easy for everyone. Luck, gut trading, whatever this is, risk-taking, leverage, you can bring a shit ton of money in short run. But if you actually want this to turn a job, a long-term, reliable, and sustainable income, if you want to build yourself a life out of trading, it requires a shit ton amount of work, because this is not going to be simple. This is definitely complicated, and I really want to be straightforward with you guys. Like others who will bullshit your head selling you can easily become a profitable traders in 6 months if you buy my coaching or anything like that. You never buy a goddamn PDF. These guys are bullshitters. Alright? I'm not selling you anything. In here, and I stand on this, all the educational content is free for everyone. Whether you use my strategy or not, whether you like it or not, everything is for free but the indicators. And by subscribing to the indicators, all you do is paying for the goddamn hard jobs I've been doing for 4 years. It's not something that just came out of my mind 1 week ago. It's been created 4 years ago and just been processed and slowly, incrementally being perfected through time to help both professionals and beginners to get into a more reliable long-term trading. That's all I want. That's all I mean in here. I don't want your money. I just want you to be profitable. And if you are using my tool, I think it's just normal for you to reward me with part of this. And just €1 a day, I don't really think it's going to be a hell of a charge if you're already a professional trader. And if you're a beginner, I think that's what you can afford without being ruined. €1 a day, which means, as I said, normally, if you get it right, if you work hard, you can expect eventually someday becoming a trader 1 year or 2 years from now. And how much will this cost? $500 at best. And if you want to live in between, you think my solution is not the one that suits you, on a day-to-day basis, you can just get out. No one will mail you to force you in or trying to get you in again. I'm not mailing anyone. Ever. I'm not sending emails to you. All right? It's simple as that. As long as you're here, it's €1 a day. The day you want to get out, you're free to do it every time. I'm not selling your plans or Black Friday 70% price drops. It's always the same price for everyone. Like I said, instead of getting fully in rapidly because you want to try this out just right now, just prove me that you understood what I meant. First of all, you download the goddamn PDF. You read it entirely, and you'll see that this isn't easy. This isn't an easy thing to process. You'll probably have to read it multiple times. And only when you think you're ready to get your hands on the dirt, then only at that moment you get to trigger the subscription plan. Then you try for yourself, and if it doesn't fit you, if you think this is more complicated than you expected and too complicated, that it is too much for you to process at the moment, just cancel the subscription. You can come back 6 months from now, I'll still be there. You can come over 2 years from now, I'll still be there. All right? And it will still be the same thing. There's no special offer right now. Nothing is going to change. 2 years from now, we'll still be doing the same old job. Simple as that. All right? So don't rush things. Make sure you're ready. Take your time. Build yourself a plan. And hopefully if you start trading with me, then I hope in the end this will be a success. If it isn't, then you still had a glimpse into one of the most complex jobs in Earth, speculating and how people do this. Because what we're doing here is playing with the future. We're forecasting the future with this amount of risk management without even goddamn knowing what the hell is going to happen. And you'll see this may change your vision of life. This may change your vision out of many, many things. Trading is definitely one of the most passionating jobs I've ever been doing. But the thing is that, yes, it is complex. It is dangerous. It is whatever every people is saying about this. Definitely it is all of this. But you'll have many choices to be helped getting into that dangerous, violent world. And I'll try doing this as good as I can do it. I'm not perfect, obviously, but well, I'm going to leave you guys in this. All right, I'm not going to stop talking endlessly. So I think I do anything I can, everything I can to help you the best I can. Obviously, it's not going to be perfect. Some people won't make it. Some people will make it. But at least I would like to say that I've done anything I could to put you into the right direction.